Yes, guys. Good morning. Let's begin. We'll continue our journey in partnership. We solved, I think, one question yesterday when we ended. What are the topics that we have already discussed yesterday in partnership basics? One, we know the 5 rules, that 5 conditions. If it is not mentioned in partnership deed, what are the 5 conditions? No salary to partners, no interest on capital, no charging interest on drawings, profit sharing ratio should be equal. Then finally, interest on loan from partner should be maximum 6%. Then outside this, there is one more condition, that is interest on capital to be paid only if there is profits. Okay, that is if it is not said otherwise. That means if they tell that you can pay in case of loss also, you will pay, but otherwise interest on capital will be paid only if it is profit. What will we do if we have sufficient profit? We will pay interest and remaining profit we will distribute to the partners. But if we have insufficient profit is there but lesser amount, then the profit itself will be distributed in capital ratio. That is one thing. Then apart from that, what did we discuss yesterday? Before guarantee, the capital methods, fixed capital method, fluctuating capital method. Fixed capital method means what? Capital will remain fixed. Only introduction of capital and withdrawal of capital will be affecting the capital account. And for all other transactions, we will maintain partners' current account. What are the other transactions? Drawings, interest on capital, interest on drawings, salary, profit share, commission, all that will be entered into partner's current account. Clear? Then drawings. We have different situations for drawings. What do you know about drawings? If at all drawings, okay, dates are given, you'll use the dates and compute the interest on drawings. If drawings are made on the same day every year, every month, same day every month. Let's say same day means starting of every starting of every month. So what will happen starting of every month? Total drawings into rate into 6.5 divided by 12. If it is middle of every month, total drawings into rate into 6 by 12. Total drawings into rate into 5.5 divided by 12 if it is end of every month. And this formula you can use only if the drawings amount is same every month and same day. Clear? Only then you can use this formula. Then apart from that, if at all they just tell total drawings, they don't tell you date, anything, nothing. Then what happens? It will become 6 by 12 because we assume that it is evenly drawn during the year, even drawings. Then we went into this topic, minimum guaranteed profit. Minimum guaranteed profit means what? One partner is guaranteed a minimum amount of profit. If it is guaranteed by firm, what will we do? Guaranteed by firm. That means first we will give that, if at all we have shortage only. If we have shortage, first we will give the profit to that person and remaining profit will be shared by other partners. If at all guarantee is given by one partner, then what we will do? We will distribute the profit. When we see shortage, that one partner will remove profit from his share and give it to this partner. If the guarantee is given by 1 or 2 partners in a particular ratio, what we will do? We will distribute the profit. We will see if there is a shortage. That shortage will be given by other partners in their agreed ratio, not profit sharing ratio, in their agreed ratio. Clear? This much we had discussed yesterday. We'll solve problems of introduction and then next we need to go into the next unit. Now, go into the second question. Ram, Rahim and Karim are partners. Ram, Rahim and Karim are partners in a firm. They have no agreement in respect of profit sharing ratio, interest on capital, interest on loan advanced by partners and remuneration payable to partners. In the matter of distribution of profits, they have put forward the following claims. What are they telling? First only, 3 partners are there. They have no agreement. Agreement is there, but for these things they don't have agreement. There is no agreement for profit sharing ratio, interest on capital, interest on drawings, nothing. They have not agreed on anything. Now, Ram, who has contributed maximum capital, demands interest on capital at the rate of 10% and the share of profit in the capital ratio. But Rahim and Karim do not agree. There is no agreement only, no. Now Ram is telling, I have contributed maximum capital. So I should get 10% return. Is it possible? No. No interest on capital. Even if you have contributed maximum capital, or even if you are the only person who has contributed capital, doesn't matter. If it is not mentioned in the agreement, then there is no interest on capital for you. And Ram is also asking for profit in capital ratio. Can we give profit in capital ratio? No, there is no agreement. So the profit sharing ratio will be equal. Next, Rahim has devoted full time for running the business and demands salary at the rate of 500 per month. But Ram and Karim do not agree. What Rahim is telling? Full time I am devoting. Every day I am coming and I am working for this firm. So I need to get salary. Is that correct? Can we give? No. Why? There is no agreement. So no salary to partners. No salary to partners. Karim demands interest on loan of 2000. Karim has given loan to the firm advanced by him at a market interest rate of 12%. Can we give interest to Karim? Can we give interest to Karim? Yes, we can give interest to Karim. But how much can we give? We can give interest only at the rate of 6%. How shall you settle the dispute and prepare profit and loss appropriation account after transferring 10% of the divisible profit to reserves? What is reserves? We had discussed in final accounts ending. Reserves and provision. What is provision? Amount kept aside for future purpose, for a particular purpose. What is reserve? Just amount kept aside for future use. Okay. They said 10% you keep aside. Net profit before taking into account any of the above claims was 45,000 at the end of the first year of their business. 45,000 profit we have. Can we give interest on capital? No. Can we give salary to partners? No. Can we charge interest? Charge interest on drawings? No, there is no drawings on it. Nothing is told. And then can we give interest on loan? Yes, but not what he is asking. He is asking for 12%. We can give only 6%. Clear? And they said that 10% shall be transferred to reserves. So before distributing, transfer 10% to reserves. Remaining everything you can distribute. Is that clear, guys? Now, question number 2. What did they ask you to prepare? They asked you to prepare P&L appropriation account. P&L appropriation account. Clear? Do we have profit? Whenever we start with P&L appropriation, I think yesterday's question we passed journal entries for P&L appropriation. When we start with P&L appropriation, do we have profit? Can you see the above claims amounted to 45,000 at the end of the first year, the net profit? So what we will do? By net profit brought down, or you can also write by P&L account. Because from P&L only the profit is coming down. The profit is 45,000. 45,000. Now interest on loan we are supposed to give. To which partner? Which partner? Karim has given loan of 2,000. So we are supposed to give him interest at the rate of 6%. So what we will do? To Karim's capital account. To Karim's capital account, 2,000 is the loan. So 2,000 into 6%. That gives you 120. 120. How much do you have left? After giving 45,000, out of 45,000, after giving 120, how much do you have left? 44,880. Can we distribute this 44,880? Can we distribute this 44,880? No, they say 10% should be kept transferred to reserves. So what you will do? P&L appropriation account debited to reserves account 44,880 into 10%. So 4488 is transferred to reserves. Reserves and all, only if they tell you we will pass the entry. Otherwise, there is nothing to be done by our side. If they tell keep this much in reserve, we'll keep that much in reserve. Remaining profit will distribute to partners. Clear? Now, do we have salary, interest on capital, anything? Nothing, right? So next, it should be to partners capital account. Who are the partners we have? Ram, Rahim and Karim. So find out what is the profit. 45,000 minus 120 minus 4488. 40,000. 40,392. We will distribute this profit in what ratio? Equal ratio, because there is no agreement. So into 1 by 3. How much? 13,464. 13,000. 13,464. Okay. These kind of questions also can appear for 4-5 marks in the exam. Yes, reserves we have to transfer. Right, guys, right. What do you, no, I don't know. It's off, is it? No, sir. Why is the display is on? Off. I don't have it actually. They must be having it. It's not cooling. No, it's let it swing. Huh? But if it's very cold also, it's swinging, right? Only for a moment you'll get it and then it's gone. Ask them for the remote. Okay, a lot of doubts from online guys. In material, they have not calculated loan. They have calculated. It is not possible that they have not calculated. They have not calculated interest on loan. Loan is it in material? Guys, you are having the study material. They have calculated, no? It is there. How can they avoid that? That is the main point. Final profit distribution should be what? 13,464 only. They should calculate that. Why didn't we take reserves amount before giving interest on loan? Because reserves is after we give all the other things, what remaining amount is there out of that divisible profit. Divisible profit means the profit that is going to be distributed. Okay, somebody asked this doubt yesterday. Okay, illustration 8 of NPO. NPO, there was one problem. Do you remember checks for repairs not presented, something like that? We have taken it as outstanding repairs. See, what institute has done is that outstanding repair, they have reduced from the cash balance. That's it. We have kept the bank like that only, and repair is there on the other side, outstanding repair. If you reduce it, what will happen? Bank, there is no balance. It become overdraft, will come to this side. No issues over there. Okay, that was one doubt. See, there is one check we have given, not presented. If they present it, bank balance, there is no money. It will come to bank OD. That's it. In this question, they have not mentioned partnership deed. Yeah, if they would not tell about partnership deed, then we will give interest, everything, because we are assuming that it is agreed. Here they told it is not agreed. That's why we are not giving all that. They have deducted that from profit. Can that method? Yes. That can be done. What lessons are there for test other than, and actually frankly speaking, I am not aware of the test. Everyone is asking me about test. What is this test? When is the test? Huh? Actually, I don't know. I am not the one who has given any paper. Yeah, so I think it's the management. They will set the paper, or maybe they'll ask me, but till now they have not asked. Okay, I don't know about this test. All that I heard in the morning was it's an online test. Means questions will be given to you online. You're supposed to, I don't know if it works, huh? I don't know. That also I don't know. It's okay. How much ever marks you study NPO, no? How much ever marks it's asked, you'll be able to answer. If it's asked of 20 marks, you'll be able to answer 30 marks, 50 marks, whatever it is, you'll know it. If it is for higher amount of marks, there will be more number of questions. That's it. If NPO comes for 100 marks, the concept of NPO is same, no? You'll have to solve more problems, that's it. Now the question here is, what lessons are there other than NPO? Is there anything else other than NPO for test? It's only NPO test. It's only NPO test. Yes, let's proceed. Question number 3. Question number 3. Let's proceed. Yes, A and B start business on 1st January 2019 with capitals. Yes. Shh. Get back. A and B start business with the capital of 30,000 and 20,000. According to the partnership deed, B is entitled to salary of 500 per month. Interest is to be allowed on opening capital 6% per annum. The remaining profits are to be distributed among the partners in profit sharing ratio. During 2019, firm earned a profit before charging salary and interest is 25,000. Prepare P&L. I think we had the same question. Question number 1. Question number 1, question number 3 and question number 4 are all same, but first one they asked journal entries. Now they are asking you P&L appropriation, then partners capital account. Because we prepared journal entries yesterday, so it is easier for us to prepare the P&L appropriation. Okay, you look into your journal entries. Yesterday you passed journal entries, no? What was the first journal entry? P&L account debited to P&L appropriation account. So you will write over here by P&L account or by net profit brought down 25,000. After that, what did you write? Salary to partner, right? So what did you write? P&L appropriation account debited to which partner? B's capital account. How much was that? 6,000. One is telling 500, one is telling 600. 500 into 12, it is 6,000. B's capital account. What was the next journal entry you passed? Interest on capital to A's capital account. How much interest on capital? 1,800. And then to B's capital account. How much interest on capital? 1,200. Okay. Basics, but this we need as we go further. So let's strengthen the basics. Now after that, profit share, right? So to partners capital account, you can write the heading and then write A, B. What was the profit that was remaining that we distributed? 16,000. 16,000 into 5 by 8 and 16,000 into 3 by 8. I think it was, right? 10,000 and 6,000. This is your P&L appropriation account. Next question is the same question, but they have asked you to prepare partners capital account. We'll prepare that also once you finish this. So same question can be asked 3 ways, not 3 ways, 3 different things can be asked. They can just tell you past journal entries, they can tell you to prepare P&L appropriation, and they can also tell you to prepare partners capital account. Partners capital account numerous times you will prepare. At least 120 times you will prepare before we finish partnership. Not here. No? Because of drawings only, I didn't feel like skipping preparing partners capital account. No, for A and B. Which question you are telling? That question, huh? Interest is to be allowed on opening capitals. That's it. B is entitled to salary and interest is to be allowed on opening capitals. Both. Just because they started the sentence with B, it might be a little confusing. Rhymes interest on loan is subtracted from profit and loss in ICA module. It is fine, guys. The profit is reduced. No, it is fine. Don't worry. Profit is reduced. The profit which is distributed is 13,000 only. No, And first they have reduced drawings interest, no. Either when you're bringing the profit or later when you're distributing, first you remove that interest on loan. Can we go further, guys? Is it done? You got what? TV remote. TV remote is here only. Yes, let's go further. See, when we go into the bigger problems of partnership, no, admission and all that, there are multiple things to prepare. We have to go into that final accounts and NPO mode where we do it together. Okay, because all lengthy solutions will be there. These are fine, no problem. Understand these. Now, fourth question, what did they ask you to prepare? Partners capital account. Who are the partners we have? A and B. Partners capital account. Okay. How do we start partners capital account? There is already some balance. So by balance brought down, what is their capital? You can see over here. A and B start business on first. Okay, they don't have balance. They're starting the business. It is fresh start. Okay, you cannot write by balance brought down. You'll write by bank account. How much is the capital? 30,000 and 20,000. 30,000, 20,000. Bank account debited to capital account 30,000, 20,000. Next, what happens? What happens? IOC. What is that? Oh, interest on capital. Okay. Okay, interest on capital. But before that, salary to partner is also given. So you write by P&L appropriation account. Under that, what is given? Salary. Salary is given only to B, 6,000. Then interest on capital. Interest on capital is 1,800 and 1,200. Then what is given? Profit share. Profit share is 10,000 and 6,000. Why are we writing like this? Actually, what is the entry? P&L appropriation to partners capital. That's why heading is by P&L appropriation. Under that, we are just giving the description of all the things. Okay. Is there anything to be taken from P&L partners capital account? Drawings. Drawings should be reduced from capital. Whenever the drawings happen, the entry is drawings account debited to cash. Correct? Drawings account debited to bank. That is the entry. Now what happens? You have to reduce it from capital. So what will be the entry? Partners capital account debited to drawings account. They have told in the question that the drawings is a particular amount. A withdrew 8,000, B withdrew 10,000 for domestic use. So A withdrew 8,000, B withdrew 10,000. Is this clear? After all this, what will happen? After all this, what happens? To balance carried down. Yes, tell me. 33,000 for B. 23,200 and 33,800 for A. This is your partner's capital account. Still confused in partnership journal entries? Okay, we'll discuss. Where is this guy? Purna. After example, he has not come back only. He has gone into incognito mode. It's not there in online also. Okay, so many people are asking that interest on loan from second question. Guys, it is not there in P&L appropriation because from 45,000 they have already reduced if they are taking it in P&L. From 45,000, what was that interest on loan? 120, yeah. 120. So 44,880. They have reduced it and they have brought only 44,880. If they have already removed the amount, again they will not charge, no. But you should know how it is charged. That's why 45,000 we brought, gave the interest on loan, and then we continued. You see the credit side of the P&L appropriation. It is not 45,000, 44,880. For that they didn't notice. They are not asking that. They are telling that interest on loan we have put no from P&L appropriation to partners capital. Yeah. That's why they brought 44,880. I hope it's clear, guys. Now, listen, actually journal entries being asked in the exam is 2-3%. They focus usually on the ledger. But in case they ask journal entries, what you will do? You know how to prepare P&L appropriation. So you'll think of the P&L appropriation. You'll think of the P&L appropriation. What is the first thing in P&L appropriation? P&L, the profit. So you'll write P&L account debited to P&L appropriation. Clear? I'm just explaining the journal entries again so that journal entries are not confusing. We gave salary to partner. What did we do? P&L appropriation we removed and put it to partner's capital account. So P&L appropriation account debited to B's capital account. We gave interest on capital. P&L appropriation to A's capital to B's capital. Computation you have to do. This is just journal entry. Profit share, what will happen? If at all there is interest on drawings, then it will be partner's capital account debited to P&L appropriation. Now, profit share again, P&L appropriation to A's capital to B's capital. Then in partner's capital account, one thing is new, that drawings. What is the entry for that drawings? Can you see drawings is on the debit side. So you will write partner's capital account debited to drawings. I hope it's clear now. Whatever ledger posting you are doing, that only no journal entry. 5. We'll go further. Okay, next question, guys. Next question. Clear? Yes. Okay, next question. Let's go further. Yes. What's the doubt? What's the doubt? Tell me. What's the doubt? Okay. What is her doubt? Which question?
Question number 4.
You meant to say question number 3? This one, no, profit share. That came from here only, no? See here. Here the calculation is there. From here it came. There we just entered because P&L appropriation we have shown. See, whatever is remaining, no profit. That into profit sharing ratio. 16,000 was remaining. Profit sharing ratio is 5:3. So 5:3 means one person will get 5 by 8, other person will get 3 by 8. Got it, no? If at all the ratio was 3:2, then one person will get 3 by 5, other person will get 2 by 5. But whatever remaining amount, that means balancing figure in that P&L appropriation you have to check. Yes, let's go further. Question number 5. Question number 5. A and B are partners sharing profits and losses in the ratio of their effective capital. What is this? Is there an agreement? Yes, they said A and B are partners sharing profits and losses in the ratio of their effective capital. So whatever capital is there in that ratio. Clear? They had 1,00,000 and 60,000 respectively in their capital account on 1st January 2019. A introduced a further capital of 10,000 on 1st April 2019 and another 5,000 on 1st July 2019. On 30th September 2019, A withdrew 40,000. Can you see what is happening? Okay, he is putting some capital, removing some capital. Then on 1st July 2019, B introduced further capital of 30,000. The partners drew the following amounts in anticipation of profit. What is this? Partners drew the following amounts in anticipation of profit. That means this is drawings. A drew 1,000 per month at the end of each month beginning from January. B drew 1,000 on 30th June and 5,000 on 30th September. 12% per annum interest on capital is allowable and 10% per annum interest on drawings is chargeable. Date of closing is 31st December 2019. That means they are following calendar year. Calculate profit sharing ratio. Then interest on capital, then interest on drawings. Calculate profit sharing ratio. Why did they tell that? Because they said that profits and losses in the ratio of their effective capital. Not closing capital. Effective capital. What is the difference? Closing capital means end of the year, whatever is there in the capital account, that is the capital. Now here, effective capital means how much the capital is used. Okay, that ratio you have to see. Now we'll calculate that, don't worry. Okay, computation of. Now, this on its own, if it is not asked also, there might be one admission question where they will tell you profit sharing ratio on the basis of effective capital. So you'll have to do it as working note there. Okay, now computation of effective capital. Who are the partners? We have partners A and B. First we will see A. A, what is the situation? A's capital, they had capital of 1,60,000 respectively in their capital account. That means when it started, what was the capital of A? 1 lakh. One lakh into 12 by 12. 12 months, starting of the year to end of the month, end of the year. The capital is 1 lakh. Clear? Next, did they introduce? Okay, there are two alternatives. I'll teach you both. A introduced further capital of 10,000 on 1st April. A introduced further capital of 10,000 on 1st April. So what happens? 10,000 into 9 by 12. 7,500. Clear? Why? Because the person has introduced capital on 1st April. No. That means the person that capital can be used only for 9 months. So effectively the capital is 7,500. They said effective capital. Clear? Next. And another 5,000 on 1st July. Another 5,000 is introduced on 1st July. So 5,000 into 6 by 12. How much? 2,500. Then what did this person do? A withdrew capital on 30th September. Withdrew capital, that means removed the capital. 40,000 into 3 by 12. That gives you minus 10,000 minus. So now what you have at the end of the year? You have 1 lakh. You have 1 lakh. Clear? Now, instead of doing every time, if at all some number would change, it would not be 1 lakh. That we know. If at all the last drawing was 60,000, then the amount would change. It would not be 1 lakh. It's not that every time it should be 1 lakh only. Now, alternatively, what we can do? Alternatively, what you can do? Instead of calculating every time, you will do 1 lakh. It was 1 lakh for how many months? Yeah, it was not for 12 months. It was 1 lakh for 3 months. Okay, alternative I am showing you. It was 1 lakh for 3 months. Why? Then it changed, right? So you can do 1 lakh into 3 by 12, 25,000. After that, what did the capital become? Capital became 1 lakh 10,000. So you can take 1 lakh 10,000. But it remained 1 lakh 10,000 for how many more months? 3 months only. Only till July it was that much. So again 3 months, 3 by 12, that gives you 27,500. After that, what happened to capital? It became 1 lakh 15,000. 1 lakh 15,000 into 3 by 12, that gives you 28,750. After that, they took the money. So their capital reduced from 1 lakh 15,000, it became 75,000. That remained 75,000 for 3 months, 3 by 12, that gives you 18,750. If you total this also, it should be 1 lakh only. If you total this also, it should be 1 lakh only. These are just two alternatives. Whichever you want, you can use. Okay. Take down both. Actually, there is third one. That one also I'll show you. Answers cannot change. It's just that whichever you're comfortable, you can take that. The logic is effective capital. They said no. Effective means how many months I could use this capital. 1 lakh. It was there at the starting. That means this capital could have been used for the entire year. 10,000. It is introduced on 1st April. That means effectively I cannot use it. Can I use this capital for first 3 months? No, it was not even put. So effectively I can use this capital only for 9 months. So that is why 9 by 12. What is introduced on 1st July, it is already half year is over. If I introduce the capital now, I can use it for only the remaining half of the year. That means effectively the capital is valid only for half year. So why minus? Because why minus? Because 9 months it is used. That 40,000 is not used for 3 months. So you are removing the weightage of 3 months. Second method is cumulative. Cumulative means what? From one date to another date. First date it was 1 lakh. From that date to 1st April it was 1 lakh. That means 3 months the capital was 1 lakh. So calculate 3 by 12. Then the capital became 1 lakh 10,000. It was also for 3 months because on 1st July again it changed. Weightage for 3 months. After 1 lakh 10,000 it became 1 lakh 15,000. 1 lakh 15,000. After that capital came down to 75,000. That remained 75,000 for 3 months. Weightage of 3 months. Second method is cumulative. Till you're feeling cold. What did you get the remote for? Should not do that. It will get spoiled. Yes, can you do the same thing for B? The same thing has to be done for B. B, what is the situation? B had capital of 60,000 and B introduced further capital of 30,000. Did B withdraw anything? Nothing. B had capital and introduced more capital. So for B it is going to be, if you are doing under first alternative, 60,000 into 12 by 12 is equal to 60,000. And he introduced further capital. When did he introduce further capital? 30,000, right? Introduced when? 1st July, yeah? 1st July. So only 6 months, 6 by 12, that makes it 15,000. So this makes it 75,000. If you are using the other alternative, it was 60,000 for how many months? It was 60,000 for 6 months. So 60,000 into 6 by 12. That gives you 30,000. After that, the capital became, no, it became 90,000. After that, the capital became 90,000. They introduced 30,000. So capital is 90,000. 90,000 into 6 by 12. That makes it 45,000. So it is 75,000 under both alternatives. Are you getting this? Why did they ask you to do this? Because they said profit sharing ratio is on the basis of effective capital. Therefore, profit sharing ratio. Can you see for B it did become 60,000. For A it was 1 lakh. No. For B it was not same number. It is not necessary it should be same number. It is just that coincidence for A. Okay, so now the profit sharing ratio will be 1 lakh is to 75,000. That means it is nothing but 4 is to 3. 4 is to 3 is the profit sharing ratio. I hope it's clear. No, they have not used 15,000. We are telling that capital is 30,000. That means effectively for how much of the year they could have used? Only half year. So capital is 30,000 in capital account. This is just for calculating profit sharing ratio. They said they wanted the profits to be in effective capital. Basically, it's like calculating average of capital. Average of capital used and that is used because they want to see the profit sharing ratio. That's it. Nothing. There is no journal entry for this. 15,000 going out, 15,000 coming in, nothing. Capital that is put in is 30,000. That is the entry. That's all. Effective capital means effectively how much of the year could be used. It's an averaging method. Clear? Yes. What did they ask next? They asked you to calculate the interest on capital. How do you calculate? Actually, how do you calculate interest on capital? Amount of capital into rate of interest, but end of the year or during the year? Nothing. What's the recorded classes for 2 days? Actually, the 2 days you forget. Yesterday, last 2 hours you watch. You'll catch up with partnership, and then remaining chapter you can watch later. Somebody couldn't attend for 2 days. Before that we were doing NPO. That you don't do now. Okay, later you see. Last 2 hours. I think 2 hours, no? We did yesterday. After the break, yeah. Last 2 hours of class yesterday you watch. For now, you'll get the partnership basics, and then you can catch up. It's okay. Once we finish this chapter, then this unit, then everything is new for everyone. Goodwill. Yes. Interest on capital. Now, how to calculate interest on capital? One method is you will calculate date by date. Person had 1 lakh. So 3 months it was 1 lakh. So 3 months you will give interest. So basically what happens for A, if you are calculating 1 lakh into 10%, how much is the interest on capital? In the question? 12%, no? 12% interest on capital. So 1 lakh into 12% into 3 by 12. Why only 3 months it was used? 1 lakh was the capital for 3 months. Can you give me this value? Here also we have an alternative method. 3,000. Then what did the capital become? 1,10,000 it became. So 1,10,000 into 12% into 3 by 12. Again it was 3 months. 3,300. Then it became 1,15,000 and it was 1,15,000 for 3 months. So into 12% into 3 by 12. Then it became 75,000 into 12%. It was 75,000 for 3 months. So 3 by 12, 250. Total the interest. 12,000. This is if we had, This is if we had not calculated effective capital. Assuming that we have not calculated effective capital. Now already capital we have done the averaging, no? So actually we can directly take 1 lakh into 12%, you will get 12,000. Are you getting my point? In this question, first they told you calculate effective capital, then interest on capital. So directly we can apply. But what if in the question, they just tell interest on capital. That time you have to calculate like this only because effective capital is not there. Do you know there is one more method called as product method over here to calculate interest on capital? Only once we are discussing that. After that, it's up to you. Whichever you want, you have to choose whenever we are doing admission, retirement and all. Once I will discuss that. Now, if I am following product method, product method for calculating interest on capital. Now what happens? Every time I have to do 3 by 12, 3 by 12, all that, no? So we avoid that. What we do, we calculate products. It was 1 lakh, right? For how many months? 3 months. So 1 lakh into 3, the product is 3 lakhs. Then it became what? 1,10,000, right? It was 1,10,000 for how many months? 3 months. 1,10,000 into 3. So the product is 3,30,000. Then it became 1,15,000, right? It remained for how many months? 3 months. So the product is 3,45,000. Then it became 75,000, right? 75,000 it was for how many months? 3 months. So 2,25,000. The product is 12 lakhs. So now what you will do when you are calculating interest? 12 lakhs into 12% into 1 by 12. Because you multiplied, you are bringing it backwards. That's it. That should also give you 12,000 only. 12,000 only, no. It cannot change. It's just the presentation method. Whichever you are comfortable. Instead of calculating again and again 3 by 12, 2 by 12, just go on multiplying everything and finally you will get the product. On the product you calculate interest, but on the product if you calculate interest will be higher amount because you multiplied every time months. So you multiplied by months, so divide the months. How many months? 12. You will get the answer. If at all, product method can be used for days also. Maybe inside a month they are telling you days. That amount you will do. You multiplied into days, then you will divide by 365. Yes, you can use either of these methods. Yes, guys. Can we go further? Are we done with interest on capital? Are we done with interest on capital? No. We have one more partner, B. What was the capital of B? First it was 60,000. So 60,000 into 12% into 6 by 12. What is the interest now? 3,600. Then the interest became, capital became 90,000. So 90,000 into 12% into 6 by 12. So total interest is, now see, capital is in the ratio of 4:3, no. So interest also should be, because on that capital only you are getting interest. Interest also will be in the ratio of 4:3 only. Okay, the product method if you are using, you will just do 60,000 into 6. That gives you 3,60,000. Then you are going to do 90,000 into 6. That gives you 5,40,000. So you get total product of 9 lakhs. So what you will do? 9 lakhs into 12% into 1 by 12. You will get 9,000. So both the methods you are supposed to get the same thing. Yes. Can we go further? Is it done with this question? No. Why? They have also asked you interest on drawings. Now what did they tell about drawings? A drew 1,000 per month at the end of each month beginning from January. So for A, is it easy to calculate? 1,000 per month. So 1,000 into 12 months into what is the rate of interest? 10%. For interest on drawings it is 10% into 5.5 divided by 12. End of the month, no. The formula, remember, 5.5 divided by 12. Value? Beginning of the month, end of the month, end of each month. So it is 5.5. If it was beginning, it would be 6.5. If it was middle, it would be 6 by 12. Clear? But can we use the same type of formula for B? Can we use for B? No. Why? B, it is different dates. Can you see? B drew 1,000 on 30th June and 5,000 on 30th September. So 1,000 on 30th June. So what we will do? 1,000 into 10%. 30th June means 6 months. They are going to use the money into 6 by 12 is equal to 50 rupees. Next, how much did 5,000 into 10%, and this 5,000 was taken on 30th of September, so only 3 months. So 3 by 12, that gives you 125. So total interest for B is 175. That should be it. You can take it down quickly. Why are we multiplying 1 by 12? No, why we are dividing 1 by 12? Actually, 1 by 12 is because every time we are multiplying into months. So later, product, we are calculating interest on product. No, product was multiplied into months. So divide by 12, you will get the answer. 1 by 12 is nothing but dividing by 12. Done. Can we go further? Yes, no, done. Yes, let's proceed. Question number 6. We still have like few questions in this. Yes, question number 6. Ram and Rahim started business with capital of 50,000 and 30,000 on 1st January 2019. Rahim is entitled to a salary of 400 per month. Interest is allowed on capitals and is charged on drawings at 6% per annum. That means what? Interest on capital is also 6% per annum. Interest on drawings is also 6% per annum. Agreed? Everything is agreed? Okay. Profits are to be distributed equally. They only agreed that it should be equal after the above noted adjustments. During the year, Ram withdrew 8,000, Rahim withdrew 10,000. The profit for the year before allowing the terms of partnership deed came to 30,000. Assuming that capitals be fixed, prepare profit and loss appropriation account and capital account and current accounts of remaining relating to partners. P&L appropriation, partners capital and partners current. Only that much. Okay, now what is the question number 6, right? 6. First, what we will do, we'll prepare P&L appropriation account. Here I am not doing simultaneously because you need to get a grip of it. But when we go to admission and all, we are doing everything simultaneously. There is no P&L appropriation, but other things, whatever is there. Okay, P&L appropriation. Now tell me how much profit is there. 30,000 profit. So what we will do, by P&L account 30,000. You are bringing 30,000 from P&L to P&L appropriation. I think you can do it simultaneously. Simple problems these are. Okay, you can do it with me only. Yes. Next. Now what happens? Rahim is entitled to a salary of 400 per month. If Rahim is entitled to a salary of 400 per month, what should be the entry? P&L appropriation account debited to Rahim's capital account. So you will write to Rahim's capital account 400 per month. 400 into 12 will make it 4,800. No? Sorry. It is a current account. Rahim's current account 4,800. Why current account? Because they said fixed capital. That means capital you cannot touch. It should be same. If they put capital, it will change. If they take capital, it will change. So 400 into 12, 4,800. Clear? What did they tell after that? Interest is allowed on capitals at the rate of 6% per annum. So interest on capital has to be paid, no? To Ram's capital account. What was Ram's capital? 50,000 and 30,000 it was. They started business with capital of 50,000 and 30,000. So 50,000 into 6%, 3,000, and we are supposed to give it to Rahim also. So Rahim's capital account 30,000 into 6%, that makes it. I hope it's clear till here. Then what? Sorry, it's not capital, no, current account. Now, is there interest on drawings? We cannot distribute this profit because this profit will increase. How will it increase? Because there is interest on drawings. Okay. So now what we will do? By Ram's current account by Rahim's current account. Ram's current account, Rahim's current account. Now you should tell me how to do this. 8,000 into, yes, that I know. 8,000 into 6% into 6 by 12. Why? Because of one concept which we studied yesterday. If they don't tell you anything, they just tell you the drawings, then it is assumed that drawings are evenly taken. That means 6 by 12 you have to calculate. So can you tell me the amount? 240. What is the other person's drawings? 10,000 into 6% into 6 by 12.
300.
When we do all this, is there salary to partners? Is there commission to partners? Anything? That day you went and came back today. Yes. 2. Partners capital account. Is there salary? Already given. Sorry, salary was there. To Rahim we already gave. Interest on capital was there. That is given. Interest on drawings charged. Now partners capital account. How much is the profit now? We have to give it to Ram and it is to be given to Rahim. Can you calculate the profit? 10,470. 10,470 will be distributed in what ratio? Or distributed amount you are telling? Okay. 20,940 into 1 by 2, 10,470. Again, it is not capital, it is current account. Everything to partners, current account, 10,470, 10,470. I hope it's clear. P&L appropriation. What is the difference here? Everything goes to current account. Just check first. P&L appropriation is done. Clear? What else did they ask you? Capital account of partners. That means partners capital account. Partners capital account. A, B, A, B. Ram, Rahim, Ram and Rahim. Yes, Ram and Rahim. No, first we will do capital. They asked both. Nothing like that, but first we have to start the business, no. Then current account will come into picture. There is no order. It's ledgers. You can do it anywhere. Okay, but why we are doing it? Because they have asked you capital account also. And one more thing is, capital is introduced first. Business starts with capital, then other transactions, so current account. If you are talking about order. Yes, what is the first entry? By bank account. Bank account debited to capital account because both of them have introduced capital. Capital of 50,000 and 30,000. Is there any other entry here? Is there any other entry here? No, that is it. All the other entries went into partners current account. Is this clear? So you will write to balance carried down 50,000, 30,000. When you go into your future questions, writing this to balance carried down in partners capital is going to be one joy. when you go into admission. If additional capital was given, it would be entered into partner's capital account. If capital was withdrawn, like A took 40,000 no, in one of that interest calculation question, then it would be returned to bank. Can we go further? What did they ask next? Partner's current account. We have Ram. We have Rahim. Always when you're preparing capital account or current account, prepare in columnar form. It becomes easy and avoids mistakes. Columnar form you prepare. Otherwise you have to prepare two ledgers. Okay. And anyways, as we go further, bigger questions you can't prepare multiple. You're going to prepare in columnar form. Okay. Now current account, did it have a balance? Can current account have a balance? Yes. In this question it cannot, because they just started the business. They just started business. So in this question they cannot have a balance. So what are the things that you have put into current account? Can you see Rahim's current account, Ram's current account, Rahim's current account? So you will write over here by P&L appropriation, and under that you will write salary. Who got salary? Only Rahim got salary. How much was the salary? And then interest on capital. Interest on capital both got, right? How much was the interest on capital? 3,000 and then we had profit share. What is the profit share? 10,470, 10,470. Then what will be there on the debit side? First to drawings, then interest on drawings, first to drawings. So you'll write to drawings account. How much was the drawings? 8,000 and 10,000. Then what you will write to, yeah, but P&L appropriation, to P&L appropriation, interest on drawings. How much is that? You calculated, no? 240 and 300. Then finally you check what balance is there. I think it is credit balance only. To balance carried down. How much? 230. 6,770. This is your partner's current account. If they don't tell anything in the question, then it is always fluctuating capital. You will go on putting everything into capital account. If they tell you, you will prepare current account. Drawing, we have put no in current account. Yes, let's proceed. Yes, let's proceed. Yes, can we go ahead? There is one more person in your bench now. Yesterday also she is absent. Yes, next question. Next question. With the same help of the same information, prepare capital account, current account. Done now. We have already finished it. They said prepare capital account and current account of partners. We have done that. Question number 8. A and B were partners in a firm sharing profits and losses in the ratio of 3:2. They admit C for 1/6 share in profits and guaranteed that his share of profit will not be less than 2 crore 50 lakhs. Total profits of the firm for the year ended 31st March 2020 were 9 crores. Calculate share of profit of each partner. Before we calculate share of profit of each partner, we don't have the new profit sharing ratio. Okay, we were supposed to do it in the next unit, but forcefully we are supposed to learn it now. What is the next thing that we need to know? How to calculate new profit sharing ratio. This one thing we will learn with this chapter, but then as and when we see questions, we will see how to prepare that. Now, in this question 8, right? 8. Before we start solving what they have asked, we need new profit sharing ratio. New profit sharing ratio. Who are the partners? A, B. Who is a new person? C. A, B, C. Do you know that we are giving something fixed to C? Not the profit. What is C share? C is admitted for 1/6 share in the profits. So do you agree that C is going to get 1/6 anymore? Whatever we earn, C will get 1/6. Correct? If C is going to get 1/6, how much is remaining? 5/6. Okay, if total profit is taken as 1 minus 1/6, basically it is 5/6. This is the remaining profit. This profit we should go to whom? A and B. So we will do 5/6, 5/6. Both will be distributed to A and B. What was A and B's profit sharing ratio? 3:2. So 5/6 into 3/5. 5/6 into 2/5. 15/30. 10/30. This is not in same terms, no. To compare, we should have the same denominator. So now what we will do? We will multiply this into 5 just to bring it into same terms. So this becomes 5/30. Basically the profit sharing ratio is 15:10:5. Nothing but 3:2:1. Without getting this, we can't calculate. Why? Because when we are distributing that profit, no, minimum guaranteed, we need this profit sharing ratio. I hope it's clear. Again, I'm explaining. If they tell 1/6 share is given to this person or 1/4 share is given to this person, okay, or this person joins for 1/6 share. If they are joining for that share, that means that share will be given to them. If out of total profit, if 1/6 is given to that partner, how much will remain? 5/6. 5/6 will be shared between other partners in their share ratio, old ratio. With that, we'll derive the new profit sharing ratio. Many times we might have to come across this in future. There are other ratios also, like sacrificing ratio and all that. What ratio? Gearing ratio is there, but luckily they have removed from your syllabus. There was one chapter called as ratios only when CA Foundation, old scheme was new scheme. When it was first introduced. All this current ratio, all that was there in that. I think you had it in 11th and 12th, a chapter called as ratios. Multiple ratios. Stock turnover ratio, debtors turnover ratio. How come 5/30? All are in same denominators, 15/30, 10/30. This is showing 1/6, no. Just to bring it to same terms, or same, so that you can compare. 1/6 is nothing but 5/30. If you simplify 5/30, it's 1/6 only. Just to bring it to same terms, we multiply, and this is the new profit sharing ratio. Did you get it? Okay. Yes. Let's go further. I hope you wrote this. Yes. Now actually we go into this question. What they told? We have guaranteed that 250 lakhs is going to be given to partner. Which partner? C, the new partner. How much profit did we earn? 900. Now, what is the profit sharing ratio? 3:2:1. No. Once you take your calculator, just do 900 into 1/6. How much is it? So, can you see we are not having the profit enough to just distribute. If at all the profit was enough, we would just distribute to all partners. It would cross the minimum. So now what we will do, guarantee is given by firm. If guarantee is given by firm, what will happen? Guarantee given by firm. If guarantee is given by firm, what will we do? Who are the partners? A, B and C. If guarantee is given by firm, first we will give the profit to the C. Whoever we have guaranteed, first we will give it to C. How much is the profit? Okay, I'm just taking rupees in lakhs, okay, just to avoid putting so many zeros. Rupees in lakhs. Okay, C we are going to give 250 straight away. Now what will happen to A and B? A and B will get 900 minus 250. How much is there? 650. That will be distributed to A and B in the ratio of 3:2. 650, 390 and 260. Rupees in lakhs. Just to avoid putting so many zeros. Is this clear? When yesterday we had discussed this. Again, if guarantee is given by firm, first you will give to the partner whom you have guaranteed. After that, the remaining will be distributed between the other partners. Clear? What is the next one? Guarantee is given by A. If we have a situation like this, if guarantee is given by a particular partner, then what will we do? We will just distribute the profit. 900 will be distributed in the ratio of 3:2:1. 450, 300 and 150. Can you see there is a shortage? Can you see shortage for C? Who will give now? A will give. So, minus 100 from A. A share becomes 350 and this will be transferred to C. So, this will be added over here. This will be 250 and B share will be 300 only. Can you see B is not affected by all this? B is not affected because B has not given the guarantee. Clear? Third situation we have, that is guarantee given by A and B equally. Their profit sharing ratio is not equal. Their profit sharing ratio is not equal. Okay, but it is given by A and B equally. So now what happens? Should we distribute first? A, B, C. 900 will be distributed in the ratio of 3:2:1. 450, 300, 150 will distribute. After that, what happens? Can you see there is a shortage? So minus 50, this becomes 400, minus 50, this becomes 250, plus 100, this becomes 250. So whatever shortage was there, that is given by the partners. Okay, we had done some example problems yesterday on this. So let me know if you have. Huh? Can we go further? Mention it at the. Yeah, that you can. Yeah. You can do it. Just write, but don't forget to write the heading rupees in lakhs or rupees in crores. Rupees in crores will be difficult because then decimals will come. So it's simply irritating. So rupees in lakhs is better. If you take rupees in crores, it will be 9, no. Then you have to write, what is that? 4.5 and all. If guarantee is given by firm, first you distribute, first you give the profit to the person whom you have given guaranteed profit, and then remaining profit is distributed between other partners in their profit sharing ratio. If guarantee is given by firm, just give it first to that person and then distribute. No. Next. Okay, let's go to the next one. Aarti, Bharti and Kriti were in partnership sharing profits and losses in the ratio of 3:4:3. Their capitals on 1st April 2019 were 3 lakh, 5 lakh and 2 lakh respectively according to the partnership deed. That means it is discussed. Kriti is entitled to a salary of 15,000 per month. Interest on opening capital is to be allowed at 12% per annum. Aarti was entitled to a rent of 500 per month for premises belonging to her, used for partnership business. No interest is to be charged on drawings. Rent paid to Aarti and salary paid to Kriti were debited to drawings account of respective partners. Bharti had withdrawn 10,000 per month from business. The profit of the firm for the year ended 31st March 2020 before charging interest on capital is amounted to 4,60,000. You are required to prepare profit and loss appropriation account and partners capital account. I want you to try this first. 5 minutes I'll give you. Question is there. Then we go into goodwill. Yes. Give it a try. Give it a try. P&L appropriation account, they didn't ask you. If at all you prepare P&L appropriation account, you will distribute the profit like how it is distributed. The final profit distribution, you will do it. Yeah, that you have to figure out. That's it. Yes. Not completely, but you just prepare correctly P&L appropriation and this thing. Prepare P&L appropriation account and partners capital account. It is not fixed capital method, so everything will be in partners capital account only. If it was fixed capital, then we had to prepare partners current account. Done, no? Do it. If I am not wrong, this is not put into new scheme, no? They have removed this question. Exam it can appear. P&L appropriation. Can you see what is there in this question? Along with normal partnership rectification of errors. That chapter can come in any chapter basically. So that's why I'm telling you, do not skip rectification of errors. They can add rectification to any given chapter. And especially now that they have introduced accounting from incomplete records, rectification becomes even more important. You have 3 more minutes. They have just changed the spelling of Kriti to make it ABC. No. Start with P&L appropriation. See how it goes. Think. For that. Riyadh. Uncheck the calculator. Yes, can we start? Question number 9, right? P&L appropriation account. P&L appropriation account. How much is the profit? 4,60,000 by P&L account 4,60,000. The variables that we know will control that. What we know, we will do it first. Then the tricky part we will discuss. What did they tell? They have told according to partnership deed, Kriti is entitled to a salary of 15,000 per month. So what we will do? Go into P&L appropriation account and you will write P&L appropriation account debited to C's capital account 15,000 into 12. You will get 1,80,000. No confusion there. Clear? Now, C is entitled to a salary, that is an interest on opening capital to be allowed at 12% per annum. You know the opening capital 3 lakh, 5 lakh and 2 lakhs. So you have to give interest on capital. So what it becomes? To A's capital account. How much was A's capital? 3 lakh. 3 lakh into 12%. 36,000. To B's capital account. 5 lakh into 12%. 60,000. To C's capital account. 2 lakhs. So 24. I don't think there is any confusion in this till here. Interest on capital and all. Now, next they have also told Aarti was entitled to a rent of 5,000 per month for premises belonging to her used for the partnership business. It should be subtracted from what? Actually, if you pay rent to a premises used by the partner, it should be already taken in P&L only. It should be taken in P&L. Why? If you take building from anybody, it's a rent you have to pay. If it is from partner or outsider, rent is rent. It has to be taken in P&L. Are you getting my point? But here what they did? Yes. So here what they have done, understand this, it should have been entry. If you pay rent, entry should have been, if I am following rectification of errors, see what they told, no, where was that mistake? Rent paid to Aarti and salary paid to Kriti were debited to drawings account. Now, correct entry for rent paid is nothing but rent account debited. Rent account debited to what? Rent paid, no, it is already paid. So it should be cash or bank account. It should have been rent account debited to cash or bank account. What have they done mistake? They debited to drawings. So now what happens? The entry automatically becomes drawings account debited to bank account. So now rectification entry should be rent account debited to drawings account. Now if you reduce the drawings, what will happen? Because it is drawings already is removed from capital, no. So because you reduce the drawings, what will happen? That is one thing. And if you don't pass rent, what will happen? Profit will be higher. Profit will be overstated. Clear? If you don't pass the rent entry, profit will be more. So 4,60,000 is before rent. Now you might be thinking, they told before charging interest only. They didn't tell rent and all. Before charging interest. Why? Because according to them, rent and salary has gone into drawings. Are you getting my point? For salary, what is the entry? Salary to partner. Salary to partner, it should salary account debited. P&L appropriation to partner's capital, right? But what did they do? Drawings debited. Here also drawings is debited. So that means we should do what? We should remove it from here and we should put it to partner's capital. Clear? I hope you are clear. Rent why we should remove? Actually rent paid to partner will not come to P&L appropriation. But this time it will come just because of the error. This time it will come just because of the error. So what we can do, instead of putting it to any partner's capital account, rent, how much is the rent? 5,000 per month, no? 60,000. So what we can do over here is 4,60,000 minus 5,000 into 12. So you can take directly 4 lakhs over here. I hope you're clear with this. Are you getting this? Didn't get it. Right? Yeah, they should have passed, yeah.
They have to minus to that in the P&L already, right? Rent.
No, not like that. See, rent paid to partner, rent is expense. Now, you might take the building from outsider, you might take the building from partner. You have to pay rent. Rent is an expense only. It is nothing to do with the appropriation of profit. Clear? Now, what happened over here? Instead of passing that to rent, they have taken it as drawings. Rent account debited to cash account, they pass the entry, drawings account debited to cash account. So now what happened? Because they did not pass the rent entry, rent is not debited in P&L. If it is not debited in P&L, that means profit is more before rent. This is profit before rent. So now 4,60,000 is the profit. From that you remove the rent and then that profit only you can distribute. Are you getting this? If at all they correctly pass the entry rent account debited to cash, next entry will be P&L account debited to rent. So if you pass P&L account debited to rent, rent will not be 460. When it comes to P&L appropriation, it will remain only 4 lakhs. So that is why, because it was not done, we are rectifying that error by reducing it over here. Salary to partner, no problem, because salary to partner, it is in P&L appropriation item. See, understand? Listen guys. Why there is difference in treatment between salary to partner and rent? Rent is a P&L item which has been put into drawings. That we are rectifying. Salary to partner is a P&L appropriation item. So we'll put it in P&L appropriation. Is this clear? Are you following this? Yes. What should happen after this? Do we have anything else? Profit only, no? Yeah, drawings and all won't come here. It is profits. Do we have interest on drawings? No, not mentioned. So nothing. So whatever is there, to partners capital account A, B, C. How much profit do you have? Only 1 lakh. Huh? 1 lakh will be shared in what ratio? 3:4:3. So this will be 1 lakh into 3 by 10, 1 lakh into 4 by 10, and 1 lakh into 3 by 10. So this becomes 30,000, 40,000, and 30,000. I hope it's clear. No doubt about this. What else have they asked? Partners capital account also they have asked. We have to do that. Write this quickly, then we'll go into partners capital account. We have not yet rectified that. Now we are putting into partners now. You see the rectification, we'll do that. They are supposed to give no salary. Wait for the partners capital account. Is it done, guys? Can we go further? Yes, let's go further. Partners capital account A, B, C. Partners capital account. Did they start the business or did they already have the balance? They were already in partnership sharing profits and losses and their capitals are given 3 lakh, 5 lakh and 2 lakhs. So what you will do, you will write by balance brought down 3 lakhs, 5 lakhs and 2 lakhs. 2 lakhs. 3 lakh, 5 lakh and 2 lakhs. What next? Salary to partner. It has to be given, no? So what we will do? Salary account, P&L appropriation account debited to partners capital. So we will write by P&L appropriation and under that you will write salary. Who is getting salary? Only C, 1,80,000, and under that you are going to write interest on capital. How much is the interest on capital? 36,000, 60,000 and 24,000. 36,000, 60,000 and 24,000. Then we are also going to write profit share. Profit share is basically 30,000, 40,000 and 30,000, 40,000 and 30,000. Now rent. What to do with rent? 60,000. Now it didn't come from P&L appropriation. It will come from where? For that you have to see this drawings account. They made a mistake, no? Understand the mistake first. What did they do? They paid rent. They paid rent. Now they passed the entry. Drawings account debited. Drawings account debited. Whose drawings this is? ArT, no. The rent is to be paid to ArT. So drawings account debited to bank account 60,000. Can you see there is one wrong debit in drawings? Whose drawings is debited? ArT. Now what we should do? ArT, do they have drawings in the question? Yeah, it is there. But who had withdrawn? ArT has not withdrawn anything. Bharti has taken 10,000 per month from the business. Now, we are paying rent to whom? ArT. When we are paying rent to ArT, they pass this mistake an entry. They pass drawings account debited to bank. Now, what we should do? If you keep this drawings like this 60,000 will go and get reduced from this 60,000 will get reduced from ArT's capital account. So now what will you do? 60,000. By rent 60,000. Are you getting this? Because you wrote by rent 60,000. Okay, the profit got reduced and that reduced profit is distributed. Are you following? Is there one more mistake? One more mistake, is there no drawings? Whose drawings that is? Kriti. C. Drawings of C. There what they did? Drawings account debited to, they have given salary, right? How much was the salary? 1,80,000. What did they do? Drawings account debited to bank account. Have they paid the salary? Have they paid the salary? No, only entitled to salary. Only entitled to salary. Below they have told salary paid to where debited to drawings account. Now what will happen? You have done 1,80,000. What will be the entry for this? By what? By what? How will you rectify this? This 1,80,000 should go. If at all we keep this 1,80,000, what will happen? P&L appropriation account. If you write by P&L appropriation account, don't you think it is becoming double effect? Don't you think it's becoming double effect? Here already we put 1,80,000. Are you getting this? Debit what? Rectification of errors. Drawings account. They have debited drawings. No doubt about that. Drawings account debited to what? Drawings account debited to not bank. Salary to C. Or basically drawings account debited, if they have debited it, it will create an error, but it's wrong treatment, but it becomes compensating error. What happens? Drawings account debited to what? They have put it to partner C only, no? 1,80,000. Are you getting my point? Drawings account is debited, yes. It has gone to whom? Partner C. That is done. But now again you should not subtract, that's all. If at all you subtract again, what will happen? Now you will remove these drawings, you will put it back to profit. Then that profit is distributed to partner's capital. Are you getting my point? So what they have done, drawings account debited. If you keep these drawings with the debit balance like this, it will get reduced from the partner's capital account. So now what we have to do, drawings account is debited. That has to be reversed. It will go back to P&L. Okay. From P&L it will come down to P&L appropriation. And in P&L appropriation it will be distributed to Kriti only as salary to partner. Are you following this? Okay, so this as a compensating error, it will not go and put any impact on us. But this, you have to pass this. If you pass this only, your profit will get reduced. And the reduced profit will come to P&L appropriation. Are you following this, guys? They have removed it from the new study material, but exam they can always ask. Okay. Just because it's removed, don't feel that it will not come in the exam. Concept. Basically, it's based on concept, so they can ask this. Now, what next? What next? Two drawings. Which drawing I am talking about now? Not the rectification of errors. This is one person has drawn, no, B, I think. How much is that? 10,000 per month into 12, 1,20,000. 1,20,000. Okay, apart from that, do we have anything, interest on drawings or anything? No. Just take the calculator and calculate to balance carried down. $3,66,000. $4,80,000. 4,34,000. That is paid, no? Which rent? That 60,000 you're talking about. See, rent account debited to bank. Rent is paid. But what happened? They didn't show it as rent. Because they didn't show it as rent, profit is higher. Now, if you don't pass that entry, profit will go. What will happen to profit? 4,60,000 will get distributed. But that much profit is not there. So, when you pass the rent entry, P&L account will reduce to 4 lakhs and that 4 lakh will come to P&L appropriation and will distribute. Payment for rent is already made. That is if it is not paid, no. If it is not paid. Rent is like any outsider payment. Any outsider payment, instead of taking building from outsider, we took from partner. That's it. Take the partner's capital account, guys. Let me know if you have any doubt. I told you rectification of errors can be merged with anything. Yes, what's your doubt? See, the first one you understood. Drawings account debited to cash or bank account 60,000. Then the next one, it should have been, we should have passed rent account debited to cash or bank account. So now we didn't pass that entry. So what we will do, rent account debited to drawings. Drawings is gone. So now rent is an expense. Expense will go to P&L. Because it goes to P&L, the profit goes from 4,60,000 to 4 lakhs. That other one, salary to partner, what they have done, drawings account debited, they have done. Okay, drawings account debited. So what will happen? If you pass drawings account debited for, what is that salary amount? 1,80,000. That 1,80,000 will get reduced from the partner's capital, no?
They have made the...
Yeah. So now you will reverse that entry. That's it. You will reverse that entry because that has to go from P&L appropriation to partner's capital. You didn't get it. Drawings account debited to bank 1,80,000 entry they have passed. But distribution of salary should go from P&L appropriation to partner's capital. No. So you'll just reverse that entry to rectify the error and you'll remove the profit from here only. This one is not going to impact our P&L. Rent will impact our P&L because rent is an indirect expense. It should go to P&L only. Got it? Do you understand? See, salary to partner is a distribution of profit, appropriation of profit. So it should go from P&L appropriation. They debited drawings. If they debit drawings, what will happen? What they credited, we don't know. Whether they credited bank, whether they credited salary to partner, whether they credited partner's capital account, we don't know what they have credited. But they have debited drawings. If you debit drawings, what happens? Drawings will get subtracted from capital, which is wrong. So what we should do? We should remove that. To remove that, what we will do? Reverse whatever they have done. Is that clear? So the problem is the complete error is not given. They have not told what they have credited. But rent is clear. Because rent, we know rent should be in P&L, it is here. Is it clear? Can we go further? Our next topic of discussion that you don't need actually, that is just for you to understand it. You can write it. That is just for you to understand. Here there is nothing actually. Yes, can we go further? Yes, we can. Our next topic of discussion is what? Next topic of discussion is breakfast. Yes, you can take your break for breakfast. Okay, we will see from tomorrow if we can extend. Online guys are also asking if possible extend the class to 3 or 3:30. We'll see.